Hello, good afternoon. Welcome to the day 37 of our this 60-day trading challenge. And today we had to close the trade a bit early with the stop loss, ORB stop loss getting hit. And then today did not trigger the stop on reverse trade. I will explain that because VIX was not in favor for the option buying per se. And also the data points were having a kind of not so very clear picture in terms of the direction of the market. So hence we just closed it with the ORB stop loss triggered first trade. We closed it with the loss, and let's get into the trade analysis. It will be a bit of interesting to learn what happened today. So let me share the screen. So if you look, this is just 1 hour chart, which of the Nifty. Just I'm starting with the 1 hour chart just to show you the logic. Our logic today was, of course, there are some other criteria also for triggering the bullish view of the trade today, which went completely wrong. But the logic was on a higher time frame. The data, not only the chart per se here, which was making kind of a clear bullish move. It was also the other data points like the option data and other things are also were actually kind of indicating the uh, market on a bullish side, definitely, and not on a bearish side. Neutral to bullish side was the expectation we had, and that is what our strategy identified. It is not a feeling per se, but it is an analysis which resulted. And if you look at it, today's first hour candle is this, and then within the first hour candle range itself, or rather, I'll put it here. This is the 9:15 to 6. So within the first hour candle range itself, the day closed, and hardly there was any movement. Like if you see, there's nothing really. It was a completely sideways. If I change this to 5 minutes, there was some chip beyond the range going out and then it coming inside and out. So here, this is some place around 11ish. It just went down as if it was going to go down, but it did not. So it ended at almost a neutral way. So coming to the trades which we had taken today, so we had our trend identification completely went wrong today. We were not correct in terms of the trend identification. So our view was that there could be a bullish a day, and this is where, and hence at 9:30, our strategy triggered the selling the 24,800 put. And as you see, hardly any time it was in our favor. Like there was almost from the moment we sold, it was against our direction, except a week here, which came into the positive territory. But otherwise, the our trade was in a negative territory the moment we took the trade. So it indicated that our trade identification was not really correct today. It does happen once in a while, but that's fine. So we had to exit at 9:55 itself. So it is hardly about 20-25 minutes we were in the trade. So the exit credit, although we had put an initial stop loss of 143, which never touched, but the other criteria what we use, as you know, is the opening range breakout of the 920 to 930 or the trade candle. So we take that reference, and then here is the place we had taken the entry reference candle was this. The Since it breached the first 15 minutes, this is the candle which is the reference candle for the lower end of the range. The one which is which is at 920 candle, 920 to 925 candle is the reference candle, I would say. And the as you see here, 950 to 955 candle is the candle which closed below the opening range, and hence very next candle, that is at 9:55. As soon as the 9:55 a.m., we just exited the trade. So this is the actual order book. So 9:30 we entered the trade at, we sold it at the 24,800 premium at 95 rupee 35 paise. and we covered that thing at 9:55 a.m. at 115.35, and then just to bring in the why we did not initiate the stop and reverse trade. This is the VIX chart. As you see in the yesterday, this is a 5 minute candle. So from yesterday, say 1:55 or 1:55 p.m. or so, it was continuously dropping. That means the volatility had completely reduced. When the VIX is low, is when it is dropping, it is not a good sign, good idea to go for the option buying strategy. And today also, like if I to see today, this is the candle, first candle itself. There was a huge drop in the VIX thing. So then the VIX was not in our favor to go for the stop and reverse, where we generally go for the option buying, and hence we just closed the trade with only single trade, and then we exited with the happy loss. That is the all stop losses are happy loss, what we call it as. So coming to the trade entry here, so we sold 24,800 put. As you saw, 95.35 is our the price at which we sold, and then we covered it at 115.55, and we incurred a trading cost of 60 rupee 90 paise. I've not been showing this, but if one can refer to the Zerodha brokerage calculator online tool, which is available by them. So as you see here, 60 rupee 86 paisa. Just every day I'm not showing that, but the reference is the Zerodha brokerage calculator. So here it is 60 rupee 90 paise, and it resulted in a loss of 1575.90. So our confidence level in the morning also was not so great, because the trend clarity was not very sharp today. Like it was not very clear. The confusing trends indicating that the higher time frame and the data points were indicating mild positive to sideways market, but the formation of the candles in the first the when we took the trade, it was kind of indicating a bullish trend. So anyway, we got it completely wrong. That's fine. So once in a while it happens. It grounds us also when the stop loss hits thing. So our equity curve is took a slight mild dip today, but we still have a healthy ROI of like 14.49 after 37 days. So again, P&L, I'm not going to stress too much, because we are not here to look at the P&L, but we are here to drive the point that sticking to the rules-based trading practice will always ends in a positive result, is what the conviction we have, and that is what we are trying to drive through this challenge. So that's all for today, and thanks a lot. Join us on Monday for the 38th day of the trading challenge, and have a great evening and a great weekend. Take care. Bye bye.